So we just got the fresh CPI data released by Stats Canada this morning. September inflation is 1.6%, massive reduction compared to the previous month. But that means the prices are still going up, but at a lower pace. Okay, that doesn't mean deflation. It's disinflation. So understand the difference, okay? Because a lot of people, when I talk to, they say, hey, what are you talking about? Inflation is coming down. I'm still paying a lot of expensive prices on these goods. Yes, the prices are still going up. So inflation 1.6 means the comparison between last September and this September is 1.6%. So the prices are still going up, but the pace is reducing. The speed is slowing down. That's what it means. So Christy Freeman put out this tweet again, as expected, congratulating Canadians that this is the good news for every Canadian. Now, what does it mean? It means Bank of Canada is going to cut 50 basis point, a jumbo rate cut, most likely because Fed has already cut 50 basis point. The economy is literally contracting. So all it means is the economy is contracting, whatever you call it, depression, recession. The reality is the economy is slowing down. The true way of measuring economy is GDP per capita. Okay, so we have been talking about this channel that the way the GDP is manipulated by importing 2 million people in this country, it will always look positive. Okay, because when the immigrant comes, they spend money in the country. Okay, on rent, food, clothing, transportation. So at an aggregate level, you actually are increasing the spending, which will make GDP look much better. Okay, but when you calculate it on a per capita basis, then it tells you the real story. For the last 8 quarters, that GDP per capita has been negative. Okay, so that tells you that the economy is literally contracting. Okay, so what does it mean? It means that real estate is going to the moon? I don't think so. That might be a possibility, but I think we're talking about the probabilities, right? The probability of housing market to go to the moon because the inflation is coming down and Bank of Canada is going to do a jumbo rate cut is very low, because it all depends upon the economy. Economy is slowing down. We are seeing delinquencies going up. We are seeing unemployment is ticking up 6.5%. It's much higher. You talk to your friends how difficult it is to get another job if, God forbid, you get laid off. I know a lot of people, a lot of my friends were laid off in the last 2-3 months. They're still not employed yet. Okay, so the job market is really tight, really tight, and it's not easy to get back into the job market and get another job. So unemployment is really concerning. In this scenario, you don't expect housing market to boom, because if you don't know whether you will be able to keep your job next month, you won't be going out putting an offer on a real estate property. So what does it mean for Canadians? Inflation is slowing down, yes, but the major portion of this CPI print is oil prices, the gasoline prices that we're paying at the pump. Okay, $1.47, $1.6 a liter. This is because the global oil prices is struggling to keep up. Okay, so the US crude oil is trading at $72 per barrel, even after OPEC's supply reduction. That means the global economy is also struggling. Okay, if the global economy is not consuming a lot of energy, a lot of oil, that means it is also struggling with the slowdown in the demand. Other than oil prices, other than the gasoline component of that CPI, food is still going up. Shelter is still above 5%. Okay, and people will argue, okay, since shelter price is interest rate sensitive. Yes, but shelter also include the rent inflation, which is not interest rate sensitive. It is a function of the population growth. So the inflation has a compounding effect, which is really the dangerous thing, because if you look at over a 4-year period, you realize how much purchasing power you have actually lost because of the compounding nature of the CPI. So imagine if you had $100,000, okay, and the stuff that you were going to buy using $100,000 in 2020 now is going to cost you $116,000. Okay, so you actually lost $16,000 worth of purchasing power because of the compounding effect of this inflation. So yes, seeing it slowing down is a good thing, is a good news, but it is still stealing our purchasing power. Even if it is 2%, we're still losing it on a compounding effect over the period of years. Okay, that's why we always recommend people to invest to hedge against this inflation. Anyway, if you like this video, give me a thumbs up, subscribe, and check out the links in the description below. Subscribe to my newsletter that I send out every week, and I'll see you in my next video. Take care. If you are an investor in the US, in Canada, or in Europe, and you are considering investing into Dubai real estate market, this video is for you, because we have a platform called Stake, which allows you to invest into the residential real estate market and start earning rental income right away without going through a lengthy documentation process or coming up with a heavy down payment. Stake is built upon the concept of crowdfunding. So it is democratizing the entire investment strategy and allows you to own a single unit of the entire investment portfolio. So you don't have to own the entire property, right? You can be part of the pool that can actually own a piece of property, a piece of real estate. So that allows you to start with as low as 2,000 dirhams, and you can slowly ramp up. So as you start investing into it, you can not only own a bit of real estate, but you also get a portion of the rental income on monthly basis. So it's a passive investment strategy, diversifying your portfolio from traditional North American or European markets into Dubai, which is hustling and bustling and growing very fast, and it allows you to build your wealth over time. So don't delay. There is a link down there in the description. If you click on this, it will give you free 200 dirhams in your account right away to start with, and you can thank me later.